a fresh all-time high. Manish Gunwani is with us. He's head of equities at Bandhan AMC, a veteran in the institutional money management business, really. Manish, good morning. Great to have you with us here. Thank you very much for joining us. How are you feeling, Manish, on about markets with the new highs? You know, you guys at Bandhan are, you've got, in a way, you're growing the business, you're getting inflows, and you've got to deploy. And that's at all-time highs, always a bit of a challenge. How are you doing it?
Yeah, Prashant, I know it's all-time high, but if you see on a two-year basis, the market hasn't really done all that much. So I think it's a fairly interesting time in the macro, in the sense that globally, if you see two surprising things are happening. One is everyone, or a lot of people thought that given the monetary tightening, we will see a big slowdown in global growth. Now, that surprisingly is not happening, especially the services side of the global economy is firing fairly big time. And we are seeing that global growth has surpassed expectations. That's the first point. The second point is that we are in a fairly peculiar configuration where the Fed is hiking rates, commodities are correcting, but at the same time, EM currencies are doing well. So I think the story of this year is actually the fall in the dollar, because if you see typically when the dollar falls, commodities go up. But the surprising part is commodities are falling, but yet emerging market and emerging market currencies, they're doing pretty well. So that's the peculiar configuration we're facing, which is kind of, I think, being the main contributor to this bull run of recent times. And I think it's difficult to see that changing, in the sense that the dollar is obviously very expensive on a fundamental basis, because it's done very well last 10, 12 years. A lot of EMs have good macro stability, whether it's India, Indonesia, and even the commodity countries like Brazil, etc. They've been beaten down over the last 10, 12 years. And we're also seeing central banks sell dollar. So I think that's the interesting point about this year, that I think the dollar trajectory is kind of driving a lot of movements.
Manish, morning. So in terms of fresh capital deployment, now banks is a consensus overweight. Earnings growth outlook is fairly resilient, robust. The valuations are reasonable. But what about the other two pockets where the growth outlook is still a bit uncertain or cloudy? One is IT and the other one is the rural economy, because the rural economy has gone through a long stretch of stress. Can growth pick up in these pockets? So if you would like to talk about and tell us, would you deploy capital in IT and rural, and how much of an overweight should banks be at current levels in our portfolio?
So as a fund manager, I think a bet on rural makes sense. Overall, our view is that the domestic economy is poised better than the global economy, because while we are seeing emerging markets do well at this point of time, the intensity of monetary tightening is such that you have to be prepared that at any time some big global event may happen, whether it's in credit or geopolitics, etc. But I think the domestic economy is on strong footing. Current account deficit, inflation, etc. I think India has done very well related to global peers. So our focus or our overweights have been more in domestic sectors, which include financials, as you mentioned, cement, real estate, industrials, auto, etc. So to that extent, I would probably bet more on a domestic segment at this point of time. Although I think that the capital that's flowing into emerging markets can drive a bit of global reflation. And for some time, given that India has outperformed a lot of the EM markets, we may see, especially China, I think we may see a phase where Chinese market bounces back and Indian market kind of underperforms China. But I still think that from a medium perspective, I would bet on rural versus IT at this point of time.
All right. Hi, Manish. Good morning. Manish, some of these new age themes they listed and they bombed out. Some of them became half, some of them became a third. But in the past quarter, they came back in style from those beaten down levels. Do you think bulk of the, of the good news or any kind of recovery, management commentary, that's all in the price, or is there more room?
I am quite positive on a few of them. I think you have to be obviously selective, but I've always maintained that there can be companies which are temporarily loss-making, but that should not preclude you from taking a 5-10 year view and looking at these companies. Now, you will obviously need a higher margin of safety to weather the next few years of losses. But I do think that a couple of them look fairly healthy to me from a long-term perspective.
Fairly healthy from a longer-term perspective. Just a quick word on the asset management businesses, if you have a view, Manish. I mean, you're intimately aware of how they work. I mean, what are the profitability levers, etc. On Friday, these stocks were very large gainers, 10, 12, 15% kind of movers. What's the road ahead, according to you? And would you want to own any of these businesses?
So I think clearly this industry's market cap has suffered a lot over the last 2-3 years due to a mix of different things, and some of those challenges still remain. So one part is the regulatory part, which obviously we saw change for the better in recent announcements. But I think that, and long term, we all know that financialization is a big theme. We think AUMs will definitely grow. A lot of these companies will become very large companies. The challenge is in terms of margins and competitive pressure. I don't think that really goes away. So we will have these cycles where people become very pessimistic on margins, yields, etc. And there'll be phases where people become overtly optimistic. So you have to be a bit of trading around these sentiments. See, this is a sector which has great ROE, ROC. It has good AUM growth. But it's a sector you have to remember that where a lot of people want to enter, and it's easy to enter in one sense. So I think, again, you have to be very cognizant of valuations. You have to be clear about which player is going to get market share. So I would think that if the stocks have done very well and let's say they continue to do well, you have to be a bit cautious on the sector.
Manish, I know it's impossible to predict the market, but do you see a scenario in the next 6 months where markets could decline 15-20% at the index level? Are there any such risks on the horizon?
Well, I think given the quantity of a correction, obviously prone to a lot of risk. We all know that short-term markets are difficult to predict, but I think we should not lose our bearings. We are still in the midst of a global tightening of monetary policy. I guess what has happened is the fiscal policy globally has been a bit loose, which is why probably growth has surprised. But I think clearly a lot of central bankers are very keen to get inflation down from even here, although inflation's fallen a bit. And when you are in that phase, clearly there's always a chance of a big credit event or some geopolitical accident happening. So I think volatility in second half will be quite high. Second half of this year.
All right, Manish, just hold on to that thought. We are getting some news coming in from Money Control. They are saying that Concord, the wheels are set in motions, and initial bids for Concord could be invited by August 1st. So we'll try to get you more on that story. But Concord is holding steady with a gain of around 2%. So just keep an eye out on that stock. And the other one that's moving very, very well is Suzlon. Now it's at close to around 16.5 rupees. I remember the stock in single digits. So Suzlon is moving higher on very large volumes. Manish, this renewable theme has come back in style. Some of those power-related stocks as well. Are you looking out for this renewable theme? And if yes, how to play that? Because there's very limited, choice out there.
No, I think power in general is a good theme because stocks are cheap. Between 2010 and 2020, we had a very big down cycle for this sector. And clearly, if we take a medium to long-term perspective of the power sector, most of the action will be on the renewable side. Now, as I said, obviously, there's not too much of directness, but the other thing you can also look at, because we've seen this happen in Europe, for example, is that when renewable becomes a bigger part of generation, you also need a lot of investments in distribution and transmission. So that entire value chain of renewable generation, transmission, distribution, I think there are a fair amount of stocks there, and also the funding of that through financiers of power capex. I think there are a fair amount of stocks which can be used to play that theme.
ICICI Securities, I think last Friday morning, I think initiated coverage on Suzlon. So it's interesting, right, that this is also happening. And I think they have a price target of 24 rupees on Suzlon. Stocks up about 7.5%, very large volumes for this point in the day. Manish, just a quick word, if you will, on insurers. You were talking about financialization. That's the other big, large space where which was hurt. And again, for stocks have done well this year. But if you take a slightly longer view, 3-4 years, they've not really done very much. What's the view?
So structurally, first of all, I personally am bullish more on general insurance than life insurance in terms of premium growth over 5-10 years. But having said that, I do think that both offer decent risk reward. Life insurance, as you alluded, basically saw a lot of regulatory actions which went adverse for the stock movements. But I think the good part of that is that it's a fairly consolidated sector. You obviously need a fair amount of capital to enter. You need a brand where people who are buying policies for 10-20 years can trust that brand. So there is a moat to that sector. The second thing is, if you see the traditional experience of large economies, it tends to grow faster than GDP because it's a discretionary product. It's a very urban, affluent product. So in that sense, the top-down scenario on life insurance is great from a 5-10 year perspective. We've seen some regulatory challenges, and it's anyone's guess if those will aggravate. But definitely, I think there should be some exposure in your portfolio to this.
Manish, we'll leave the conversation here. Thank you very much for joining in and look forward to chatting with you more frequently. By the way, for the markets, we've hit